On Wednesday, Wall Street was hit by disappointment, fear, pessimism, and a massive selling. Now let's discuss the results of yesterday's New York trade and prospects. Following a nosedive yesterday, US stocks seem to be trading moderately lower. Yesterday, major Wall Street indexes printed fresh two-year lows in terms of intraday losses. The Dow Jones closed with a 3.7% slump. The Nasdaq closed 4.7% down, and the S&P 500 lost 4% to close at 3,920 points. Today, pessimism is spreading over to Asian and European markets. The New York pre-market does not reveal any reversal signs. There are no preconditions for that either. The key stock indexes are declining 0.7 and 0.9% on average. The S&P 500 is likely to trade in the corridor between 3,820 and 3,940 points. As we predicted earlier, a burst of optimism on Wall Street turned into fear. Despite the lack of downbeat data from the United States, the market is eventually responding to a bunch of alarming signs. The first one is the global inflation. Among other headwinds are risks of a slowdown, geopolitical jitters, the hawkish US Fed, disrupted supply chains, and the shortage of commodities. Yesterday, investors were discouraged by gloomy economic data from the UK, the United States, Canada, and Japan. Apart from the economic calendar, investors are stoking fears in the light of financial reports from US retailers. Target stocks tumbled 25% yesterday, on the news that its profits shrank twice due to rising fuel and freight costs. Walmart stocks dropped more than 17%. Falling profits of retailers prove that high inflation is putting strain on consumers. People are living on a tight budget, focusing on essentials. Consumer activity is going down at a faster pace than in a couple of months ago. Mounting inflation fears fueled a massive sell-off in the stock market, so the S&P 500 has fallen 18% this year. The Nasdaq has plummeted almost 27%. Stocks of Apple, Microsoft, Tesla, Amazon, and Meta shed 1 or 2%. Such heavy selling indicates that despite boasts of optimism, the stock market is not able to develop a steady uptrend. It's capable of regaining some losses in the best case. The overall pessimism about soaring inflation and its grave impact on the consumer sentiment affected the US currency. The US dollar index stayed at about 103.50 on a Wednesday. Now it's retreating. The corridor for the instrument is seen between 102.60 and 103.40. Fresh stats from the United States worsened concern over stagflation in the global economy and a sour consumer sentiment in the United States. The thing is that the US manufacturing sector and the labor market do not reveal the strength which the US Fed relies on. The number of Americans who applied for unemployment benefits increased by 21,000 to 218,000 last week. It's the highest reading since January. Besides, this score is higher than the previous growth of 197,000 and above the consensus of a 2,000 increase. Traders are most discouraged by a report by the Federal Reserve Bank of Philadelphia. The manufacturing index dropped sharply to 2.6 points in May, the lowest figure in 2 years, and way below the forecast of 16 points. Negative trends are discovered in inventories, manufacturing employment, and an average duration of a work week, whereas new orders and shipments grew at a faster pace. The USD CAD pair approached 1.2890 yesterday. Today, the currency pair is heading downward, driven by a decline in the greenback and the oil prices. The intraday corridor for the pair is defined between 1.2750 and 1.2840. Despite some retracement in the Canadian dollar, it will hardly reverse its trajectory against its American rival. Both countries are under similar economic conditions. Their central banks stick to the hawkish rhetoric, aiming for aggressive monetary tightening. Inflation is raging in both economies. Among other negatives are disruption in logistics, a roller coaster over oil prices, waning consumer activity, and the limping manufacturing sector. The outlook for the USD CAD pair is upward. The bearish sentiment is ruling the crypto market. Following risky assets, Bitcoin is heading for $28,600, though with a faint attempts to climb to the landmark level of 30,000. There are no fundamentals for optimism among crypto investors. The digital token is trading lower like the stock market and the Nasdaq in particular. The flagship crypto has been looked inside the range between 28,200 and 31,400 for long. It's too weak to gain bullish momentum. The trading range for today is defined between $29,100 and $30,600. I hope your trading will benefit from the advice of our analysts. Good luck in trading and see you online soon.